And joining me now from Naples, Florida is Bob Iaccino. He's a co-founder and chief market strategist at Path Trading Partners. Bob, no shortage of things for us to talk about here. And as we get ready for trade on this Monday morning, the S&P 500 looking to rise about 1% at the open. Walk us through the market's response to the latest tariff news that we're getting from the White House.
Well, you can see positive response this morning, Kristen, from the I'll call it rumors going around that the April 2nd tariffs may be more targeted than originally thought. And this is pretty much a theme, at least let's call it for the first 1/100th of this particular presidency. It's been quite a ride from a rhetorical perspective. But when you look at the way things are happening, at least so far, we got the import numbers recently and prices had not really budged. They still sit above the pre-pandemic level, but that's been where they've been basically since the entire supply chain situation calmed down and we saw stocks rise with prices there. Inflation's still a little bit stubborn. So I think the market maybe is going to be disappointed from the slightly dovish Fed, let's call it dovish Fed statement and press conference that we got over the last meeting. But the way you look at it right now, this bounce that we're seeing at least seems short-term sustainable to me.
Interesting. So short-term sustainable in this bounce. Right. The next Fed meeting we know won't be until early May. So we do have at least more than a month, Bob, before we get any more sort of decision making, that is, at least from the Federal Reserve, that's baked in. For our viewers watching, you know, they probably are investors in the stock market, maybe long-term for their 401k, or maybe they are trading on a short-term basis. What would you tell them as we do see a choppy market as to how to navigate some of the twists and turns that we've been getting?
Well, it really depends on timing, as it always does, right? I mean, I've been calling for a 15 to 30% drop since November of last year. And that drop would be based on the Trump administration having success on some of the things they campaigned on. The first thing we needed to see is, were they going to actually do what they campaigned on? I think we're seeing that actually happen. Then were they going to have some success, for example, with cutting government employment? Government employment, whether you're a fan of it or not, is definitely going to slow the economy if it gets cut. That's less workers going into the economy, being paid and spending money, despite whatever severance they may get. They're going to be nervous until the private sector absorbs them. And that's really an if the private sector absorbs them. If they do, and if there's success, that's going to take some time. So we had a 14 and change % drop in the NASDAQ. I'm not going to declare sort of victory on that call yet. And it's hard to declare victory on that sort of a negative call for the stock market. But if we actually get it, and if it's based on this success, and if the private sector absorbs them, you're talking about a multi-generational buy opportunity. So that's why I say short term in terms of this particular rebound that we're getting, because I believe that the other shoe needs to drop. We didn't really see an exhaustion point from the selling of the equities. Having said that, I'm not long the indexes right now, but I am buying specific stocks that I liked prior to this particular drop.
In terms of a potential generational buying opportunity, what particular stocks are on your radar, perhaps before you feel comfortable owning the indices outright, as you mentioned earlier?
Well, I could mention a couple that we bought during this particular dip, and it's really recommendations to clients. We do have some personal holdings, but I want to list out the things we've recommended to clients. One of those was General Dynamics. Really like GD. A lot of it has to do with the potential for Europe rearming. The European defense sector is not very well built out. So whether they buy through the federal government, where they go direct, General Dynamics and then also Boeing are two stocks we like based on that little thesis. If Europe ends up rearming, if they don't, that just means the U.S. is going to double down on protecting Europe, which obviously there's a lot of ifs in that particular statement as well. So either way, we think defense sectors do pretty well. I also like energy a lot. Favorite name for there is FANG, Diamondback Energy, FANG. Bought some of that. And then a longer term holding, Legend Biotech, that's working on some pretty significant cancer research. That's LEGN. That's a much longer term hold. May buy some more of that this morning, depending on how the price action goes. Have not done it, but we do have a core holding of that. And then we're still long gold. We put out a long gold prediction, or rather recommendation, in November of 2022. and we're still holding that. Gold is really, I think, a mandatory hold for people during this particular administration, again, regardless of what you think of them, because they're going in the direction of less government spending, and that could be stagflation when you're looking at inflation still being, regardless of which one you use, CPI or PCE, in that 2.8% to 3.5% range on a continuing basis and starting to accelerate to the upside. So I don't think there's that much evidence that tariffs is going to ramp up domestic inflation, but a lot of analysts seem to think that's going to happen. And if that's the case, certainly not going to help the wage growth and inflationary situation that we're already in.
I want to ask you, Bob, about cryptocurrency because just as the S&P 500 is up about 1.2%, gold is up fractionally this morning, and crypto, Bitcoin at least, is up about 2.6%. Given what we've heard from this administration on cryptocurrency, what is your view on a purchase like Bitcoin?
Well, I'm not a believer that Bitcoin is going to be a government holding. They've already got a bunch of Bitcoin and crypto in general that they've seized in some of the legal proceedings that have gone on. That obviously went on during the Biden administration. So that particular amount of Bitcoin could be a government holding. I'd rather see it go back to people who were theoretically cheated or defrauded if that actually played out. But the problem I have with Bitcoin, I like the asset. I do hold the asset personally, but it has to lose its downside correlation with the NASDAQ. It is not an uncorrelated or non-correlated asset at this point. If the NASDAQ falls, Bitcoin still falls. And that's the problem I have with it, where that isn't the case with gold. I'm not saying gold's a better safety play. Actually, I am saying that. Why am I even putting that disclaimer in there? I think gold's a better safety play because it is still an uncorrelated asset. Bitcoin, I believe, will lose their correlation to NASDAQ, but basically the explanation now is people who believe in technology and buy the NASDAQ, they also buy Bitcoin. So when they're raising cash, they sell Bitcoin as well. That has to break.
Bob Iaccino, great to have you on the show. He's a co-founder and chief market strategist at Path Trading Partners, joining us from Florida. Bob, hope you'll join us again.
Will do. Good to see you.
You too.